Did Bitcoin just flash its most brutal signal in history? Right now, 99% of short-term holders are sitting at a loss. That's the worst reading ever recorded. Price is tanking, sentiment is wrecked, and people are starting to panic. But here's the real question. Is something actually wrong with Bitcoin, or is Bitcoin simply reacting to much bigger forces brewing in the global economy? Today, we're digging into the metrics that matter: on-chain signals, liquidity flows, and macro stress indicators to find out whether this is a true warning sign or if everything outside of Bitcoin, from equities to credit markets to global liquidity, are the real problem. The real question now is, how bad is it going to get? So drop a like on the video, lock in. You're not going to want to miss this one. I am Ben with the BTC Sessions. This is your weekly session. I want to welcome to the show my co-host with the most, Mr. Nathan Fitzsimmons, Bitcoin mentor. How you doing, buddy?
I'm doing pretty good. Do you see that the markets kind of look like shit? And it seems like they might be trying to distract us with things.
Yeah. I definitely noticed the distractions abounding, and people are not looking in the right areas. So we're going to discuss this. But it's Bitcoin is taking a dump right now. It wasn't that long ago. It was early October. We were hitting all-time highs. We were 125, 126. And earlier today, mid 80s. It doesn't feel nice, especially if you're new to Bitcoin. You're like, what in the hell is happening? I was promised spicy gains. And you're getting spicy drops. If 99% of short-term holders are at a loss right now, that's not a nice thing to be looking down the barrel of for your average person. And we'll just take a peek here. So here's the chart showing basically this bottom indicator here, the oscillation. Again, lowest ever. 99% of short-term holders are now at a loss. So if you bought within
the last 5 months.
The last 5 months. So just to give you an idea, over here on the right-hand side, these are examples of prior collapses. 2020, the COVID crash. And this was wild. Like, this one was like a 60, Bitcoin got more than cut in half in like a few days. Then 92% of short-term holders were at a loss. So like, not as bad as right now. 2022 FTX, so the biggest exchange, it was like the darling of the industry at the time. I mean, the cracks were evident, but nonetheless, a lot of people trusted FTX. Kevin O'Leary going to bat for them. They get all the big ads. They've got Matt Damon. They've got Tom Brady. They've got everybody on their side. And they completely collapsed. They rug pull billions and billions of people's money. And Bitcoin at that point dropped below the previous all-time high. Or sorry, the previous cycle's all-time high as a low, which people didn't think was possible. It had never happened before. It was always like, no, that's the absolute bottom. So it dropped below that. 94% of short-term holders at that time at a loss. Today, 99%. That's staggering. So yeah, it's not, I mean, again, you get through a couple cycles and you can kind of weather these storms. And percentage wise, this is not as big of a drop, but let's keep looking at some of these interesting metrics here. So risk indicator, there's a short-term holder cost basis model. So Bitcoin, again, falls below the lower band of the short-term holder cost basis model for the third time since 2024. So, some people can look at this and say, well, every time it goes below the band, it goes back up. Well, yeah, a little bit, but like look back in 21 into 22, it dipped below the band, and then it came back up only to dip again. So, are we still on an upward trajectory overall? Or are we about to see some bear market action? And I don't know. Do you have a particular leaning either way, Nathan?
I do. I think we're coming into, I would say, I suspect we're coming into like a short-term bear market. I don't think we're doing like the years drawn out and sideways grind downwards. I think it's going to be one of those kind of crypto, I hate that word, crypto winters, Bitcoin winter. But I think ultimately what we're looking at is stress in the system. And I think this is going to end up being more reflective of the COVID crash, where it definitely could hurt more from here, but it's not going to be long lived, right? We have the new Fed chair coming in May too. I think there's going to be potential. We'll get into more of it. I think there's going to be a big response, but I would not be surprised to see things get a little bit more painful over the next 6 months. But then the magic happens.
Yeah, it could be. Again, we're gonna keep plugging along here, looking at a few more things here. This is a supply in profit / loss, and right now, almost 7 billion worth of Bitcoin are currently sitting at an unrealized loss, meaning that somebody bought it at a price higher than it currently is. So not a great metric to see. Also, Joe Consorti, he was on the show last week. Great dude. Bitcoin sentiment now substantially worse than it was at the 2022 low when FTX blew up. If that's telling you anything, and on top of that, we have the Bitcoin Fear and Greed Index. It's at 11. So that people are freaking the hell out. Now, historically, like it's at some of the lowest it's ever been. It was lower. I think it was 10 the other day, if I'm not mistaken. But not looking so hot. I think I saw it at 9 at one point. But regardless, this could be a counter indicator. Like, when there's blood in the streets, the blood is your own. Now, this isn't just applying to people that are buying and selling Bitcoin. This is also applying to other industries in Bitcoin, including mining. And so the hash price index, Nathan, can you just illuminate people on what the hash price index even is?
So for the hash price index, I think it's the return they're getting on their mining ASICs on their hash power. So it's a reflection of how profitable the mining companies are, which is a combination of like what's the difficulty, how many people are competing in terms of what they have for their hash, as well as what the cost of Bitcoin is, right? It's the price that people are paying for their hash, because essentially they're just selling their hash to, I think it goes the whole template thing. They're just selling their hash to other people and to pools. And so what it's telling you is that the value of the ASICs that they hold, the value of that hash power is declining, right? There's no demand for it necessarily in the market, reflected in the Bitcoin price. So essentially, miners are not very profitable right now. It's not a good time for the mining industry.
Yeah. So the headline here from Bitcoin News: Bitcoin's hash price has fallen to its lowest level ever recorded since Luxor began tracking the metric in December of 2016, almost a decade ago. So 9 years ago. So that's now you can look at this two ways. One, if you're a miner, that sucks.
Yep.
But two, it's also the market is, this is forcing the market to find efficient ways of getting power, right? And it forces the market to create more efficient hardware. And in terms of difficulty, it's self-adjusting. So there's a difficulty adjustment roughly every 2 weeks. And what happens is if it's taking longer, if a block is mined more than every 10 minutes, so it's taking longer to mine blocks, then the difficulty of mining Bitcoin drops, and the miners that were able to weather that storm become more profitable again. So it is a self-regulating thing. The difficulty adjustment is one of the important key components of the Bitcoin network itself.
And I would expect to see it to come down over the next little while, right? With the hash price of this value, you would expect to see miners unplug or turn off some of their more expensive to operate rigs.
Yeah, 100%. Now, because of this hash price index dropping so low, we've seen some interesting things out of miners. And Nathan, you got a spicy take on this one, but Bitcoin miners pivot to AI to offset the bear market challenges. 70% of leading Bitcoin miners are now generating revenue from AI or high performance computing initiatives. AI hosting agreements can offer miners higher contracted revenue per megawatt than traditional Bitcoin mining. Pivoting to AI is changing miner priorities, reducing network hash rate growth, but improving business stability. So I saw this an announcement from Ben Gagnon from what is their Bitfarms. Bitfarms. I saw that announcement there, but there's more here. Core Scientific, BitDeer, Iris, a whole bunch of them are expanding to AI. Now, you got a spicy take on this. What are your thoughts on miners pivoting and maybe doing both, or just moving to general purpose computing like this?
I think this is going to bite them in the ass is what I think is going to happen here. Essentially, it's almost like the moment, like, it's the Gretzky thing. Like, don't chase the puck, go to where the puck is. This is chasing the puck. Like AI, whether it's now or 6 months or 2 years from now, absolutely has at least a bit of a frothy bubble kind of situation going on here. The AI infrastructure as well too is not a constant demand, right? People have to be up and making requests and necessarily using it. It's not like ASICs that you just plug them in and set it. I think this is the wrong direction. And the unfortunate thing too is that they can't use these computing units for Bitcoin mining, right? You can still use the infrastructure, the energy that you have. So there's a little bit of crossover there. But like going back to like buying when there's blood in the streets, this would probably be a good time to start accumulating some ASICs for when Bitcoin starts to run again. And I think they're setting themselves up for disappointment as we see a bit of a cleansing in the AI industry as well too. I don't think it's necessarily a good idea. And ultimately, like, I've had many conversations about this. I think being just like an AI compute center or just a Bitcoin mining center is not a sustainable business model. That ultimately that ends up being a service that's plugged in directly to energy providers, or energy providers are the ones doing it. So I think this is flashy. It's fun. It maybe gives them a little bit of revenue in the long term, but I think that those units will also decline in their value, and it'll probably come shortly after. Like, it'll probably have that moment, and then Bitcoin will start to rip again, and now you got to go out and buy more ASICs and swap them out and replace them.
Yeah, opportunity cost. You're sitting on both sides of the fence. But again, like, you've got you can't use an ASIC to provide AI, right? Like,
Yep.
that's different. It's ASIC literally means applicate, like it's specific to the application.
Yeah.
So you can't just pivot your Bitcoin miners. You got to get new infrastructure, and yeah, so there's an opportunity cost there. You have a data center, and if you want to swap out for the miners, you got work to do.
Yeah.
Now, again, this is reaching beyond your average holder. It's also affecting some treasury companies in a way. Okay, so we got to look at this.
Let's take a quick peek, shall we?
So David Bailey. So the original tweet from BitcoinTreasuries.net, just in, Nakamoto has sold 367 Bitcoin and now holds a total of 5,398 Bitcoin. David Bailey quote tweeted it and said, "Just to clarify, we didn't sell Bitcoin. We invested the Bitcoin across several international treasury companies, Treasury BTC, Metaplanet, Future Holdings. As a core part of our strategy is monetizing our Bitcoin balance sheet. Our direct Bitcoin balance does not capture the value of these equity investments." Now,
funny word salad there, isn't there? It's like, okay, we didn't sell the Bitcoin. Okay, let me just say, you took your Bitcoin, which is the money, and you gave it to somebody else in exchange for their paper equity. Okay, sure, you did not sell the Bitcoin. I will grant you that, but you did fucking spend it.
Yeah. Would this be it's more of a barter trade.
Yep.
I'd say but I mean, yeah, it's there again, like when you have a Bitcoin treasury and then you take some of that treasury and then you give it to somebody else in exchange for another thing. I mean, you kind of sold your Bitcoin. Like, you spent it. You're right. Like, but like,
we're splitting hairs here, David Bailey, and it's nothing against you personally. It's like, yeah, you got rid of your Bitcoin in exchange for something else. Whether you went through dollars in the meantime or you just did a direct barter trade and essentially spent it, it doesn't particularly matter. But at the end of the day, like, the big thing here, I think, is that, like, this idea of a Bitcoin treasury company, like, it's kind of an oxymoron, right? That, like, treasury is not a functional business, right? You could be a custodian, you could be like a Bitcoin bank, right? Those are businesses. You could maybe generate a business model around that. Like, Saylor's kind of selling bonds. That's essentially what he's doing. And so I get that you could maybe call it like an investment, but I think this is just, it's another little signpost along the way that this fad has run its course and it's done, man. It is done. And I'm happy and relieved because this really was the shitcoin of this cycle. It was here. Give me your money so I can buy Bitcoin and I will give you my paper.
Yeah. I'm not bullish on Bitcoin treasury companies.
No.
Honestly, like it's further removed than buying the ETF, right? Like the ETF is you're getting exposure to Bitcoin. When you buy a treasury company, you're getting exposure to a dude who has Bitcoin.
Yep.
Like that's sort of like a group of people who have Bitcoin, who have no obligation to keep the Bitcoin, right? Like they can say, they can promise that they're going to do that, but like again, it's not the same. And I think for your average person, the best thing to do is just have Bitcoin. You remove all counterparty risk. You have the thing. Just self-custody your Bitcoin, guys. Like again,
I completely agree. And the other one is that, like, I am not bullish on Bitcoin treasury companies. I'm extremely bullish on companies that have Bitcoin treasuries. Separate thing, right? Flip those around. It actually then works. And even just thinking about it a little bit further, I know that David here is trying to defend his company's position, and I get that. He's got to do that, right? He's got a responsibility to the shareholders. But essentially what he's explaining is even worse, because rather than spending money to have exposure to a guy that has Bitcoin, what they've done here is you're spending money to have exposure to a guy who has exposure to another guy who has Bitcoin. Like, and that's an improvement. That was somehow putting the company in a stronger position. Like, it's just ridiculous. Yeah.
I'm not saying, but I'm just saying, like, I don't know. I feel like it's an overcomplication of what could just be, you should get some Bitcoin. So yeah, it is what it is. I did want to mention that, yes, we've had a, we had a little sentiment was bad or is bad. We've had a 30% pullback, something like that.
Something like that. Because last I looked, we were at like 28%, but we're down from there.
Yeah. So whatever it is, it's a lot of double digits that are happening there. But I just wanted to historically kind of reflect on moments of panic again. So this is just looking back to the FTX crash when, there were these moments that were highlighted here in the short-term holder supply in profit/loss. And so they outlined the COVID crash and the FTX collapse. And so 94% of people, so not nearly as bad as the 99%, 94% for the FTX in 2022, and 92% of people at a loss for the 2020 COVID crash. And just again, to outline here, down here at the bottom, this was the FTX crash. It went down to like 15K. And, hopping forward, even just like a year and a half, it's like it was up in the 70s. So basically, had you just, opportunity there is wild. 15K Bitcoin, when a year and a half later, it's sitting at like 75. So that's wild. And again, jumping over to the 2020 COVID crash, which is right here, Bitcoin went to like 4K. It was a big drop. It was like 12 or something. It was 10. And then all of a sudden, it just got sliced in half during that COVID panic. And then, and this is the crazy part, 4K in like April, March of 2020. And you go to literally a year and a half later and it's all-time highs.
Yep.
Like what I'm getting at is there are moments of opportunity. And yes, you could have bought when it was 10 thinking, oh, it's so low. And then it dunks to 4 and you're like, oh my God. But also you got it at 10. It was at 60, 69, like a year and a half later. So it's all relative. And yes, there could be moments from here where it's much lower than it is right now. But I'm near positive that there's going to be moments from here where it's multiples where it is right now. So take it for what it is. And on top of that, I don't think that this is just a Bitcoin thing. We hinted at that. There's a lot of shit going down. We're going to be talking about that momentarily. But I mean, we see it. We see it in our day-to-day. We see people struggling. But the markets, like if you guys have been paying attention to just like kind of the mainstream news about it and looking at how things are actually going down, it is staggering. And so we're going to touch on that in a moment. We're going to say a quick shout out to our sponsors on the other side of things. We're going to look at how bad things are and why Bitcoin might be responding to it in this way. So we'll see you guys in just one sec. Drop a like on the video if you're enjoying the convo. Be right back. Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC Sessions to sign up today. And you can share your own personalized referral link to earn commissions. CoinKite has been in the game for years, creating hands down the best and most secure hardware when it comes to securing your Bitcoin. The Cold Card Q is an absolute powerhouse and my daily driver, and it's ideal for newcomers and advanced users alike. The Tap Signer gives you a low-cost, user-friendly option for those just getting started or for convenience when traveling. You can head to coinkite.com and use code BTC Sessions for discounts, or simply scan the QR code on the screen to get started right away. DEBIFI is the best and easiest way to borrow against your Bitcoin in a non-custodial way. Funds are held in a multisig escrow where you hold a key, and the platform allows for excellent hardware like the Cold Card Mark IV and the Q. You have access to flexible conditions, the best rates, and institutional grade liquidity. If you're looking to make use of your capital, don't sell your Bitcoin, borrow against it. You can head over to DEBIFI.com to check them out, or simply scan the QR code on the screen. All right, we are back in, and we got to discuss what is going on in the broader markets, because it's a bit of a shit show. Like we were aggregating stuff for today's show. I didn't realize, like I knew it was bad. I know that they're hand waving things and trying to pretend like I know we're going to have people on both sides of the political aisle watching this. And there's definitely been many times where Trump is like, this is the best economy we've ever had. Guys, it's not though. And I'm not saying it's specifically him. I'm saying the system is irreparable. It's broken. You can't, like, you have to keep printing. You have to keep, like, it's never going to fix itself. So let's take a look at a number of metrics here. So number one, this is, and it's not a huge percentage drop here, but this is the S&P 500. It dropped 2.5% in 80 minutes and turned negative on the same day that, Bitcoin and everything was collapsing. 2.5% in 80 minutes is crazy for the S&P 500. That's
everyone's savings, dude. That's everyone's savings. It's not like, Bitcoin. Yeah, we don't have hyper Bitcoinization yet. You talk to all your friends and things like, who's really here, who self-custodies at this point too. You go and ask people like if they have like S&P 500 in their retirement account. That means that the vast majority of people who have any savings whatsoever took a 2% haircut on that portion, which is massive, right? You got to put it all in context.
Yeah, the size of the S&P 500 is staggering, and for it to drop 2.5% in literally 80 minutes is unbelievable. Now, beyond this, in the same kind of general bucket, we've got NVIDIA turns negative, down 1%. Now, this is a big deal. How do you look at NVIDIA and how it plays into everything, Nathan?
we have like whether the Mag 7 has become way too concentrated. And again, everyone's just indexing in. So it's tons of like passive flows. It's not like people are actively investing. The whole like value investors thing, it's just out the window right now. It's basically like momentum and sentiment and just not even euphoria, just like set it and forget it because the money's so broken. They treat this as their savings account, which is supposed to be the money. And NVIDIA makes up a massive portion of that, right? I remember looking, it was NVIDIA is valued at twice the value of Canada, which again, Canada sucks. But we do have a lot of like gold and oil and uranium and things too. That's a little bit very productive commodities here, if nothing else. Like that might be a little bit out over their skis. So when NVIDIA takes a big turn like this, if we see a big correction in basically the tech that's holding up the top, it's just going to drag the entire economy down with it. Because essentially that like wealth effect, and this is what everyone is holding as their money. Yeah, it's going to be chaos, turmoil. It's going to be bad.
100%. Now, branching out a little bit more here, the housing market, that was the crux of the '08 financial crisis. Well, 53% of homes have lost value over the past year. This is the highest share of depreciation in 13 years. That doesn't bode well. So many people, first of all, like so many people can't even afford to get into a home. But like a lot of people, like a lot of retiring boomers, that's their retirement account, right? That's a problem. And if real estate takes a dump, the whole economy takes a dump as well. It's not looking good. And to that point, when nobody's wanting to buy homes, nobody's wanting to buy and sell. I can't remember. There's a metric that we covered, I think last week or the week before, but like the stagnation of actual transactions in real estate was
Massive. Yeah, there's nothing changing hands.
Yeah. And so because of that, they're also not building, which means lumber is its lowest price this year. It's taken a dump as well. Nobody's building anything. It's not looking great. And lumber taking a dump means that Home Depot collapsed after horrible earnings. The economy sucks. Yeah, nobody's building anything. Everybody's broke. It's crazy. Now, in the same kind of commodities sector here, we also have WTI crude. And I want you to kind of give your take on this, Nathan. Like, what is going on here?
That is basically a reflection of like economic activity. Like energy is the input to everything that we do. We can see that basically it peaked there in around like mid 2022. And it's kind of just been on this decline ever since. Like we really haven't paid for all the damage that was done over COVID. We papered over it with just fake money, but we're still seeing that. So this decline that you're seeing in crude is reflective of like basically less operations, less businesses. There's less going on. It's a reflection of almost human activity in the sense that if no one is demanding energy, that means they're not doing anything. If no one is demanding lumber, that means they're not building everything. And even on this, I think it's like the 5-year chart. That's not at an all-time low, but don't forget, that's not adjusted for inflation. So $59 today is a lot less than $59 5 years ago, which we all know that because we've been to the grocery store. So Home Depot, we're seeing this in equities, we're seeing this in energy and in building materials. It's all a reflection of like the economy is grinding to a halt. Things are slowing. People are not starting new businesses. They're not starting new projects, which means there's going to be less money issued through the creation, through credit, and it's going to be circulating a lot less. I mean, the engine analogy is really stupid in describing an economy, but it kind of works here in the sense that like the motor's kind of seizing up a little bit. And if you don't have, in order to be able to pay back the credit, you need that money to circulate because of our stupid system. We get on a Bitcoin standard, it's not necessary.
Yeah.
It means that you're going to see money circulation decreasing, money velocity decreasing. Short answer, lumber down, oil down, economy bad.
Yeah, exactly. Now, we've heard a lot about the overnight repo markets. And so this chart's an interesting one. So we see overnight repo markets, and we see this huge kind of bubble happen from basically 2021, which coincided with money printer go burr. And we've seen that kind of peak in and around 2023 and then just downward to back to kind of where it was pre-COVID. What is this? Why does it matter?
The reason this matters, again, we're trying to get a sense of like where the market's going. Like, are the problems in Bitcoin right now? Is Bitcoin the issue? Is Bitcoin? And I don't think it has. I don't think the Bitcoin price has anything to do with Bitcoin. It has everything to do with basically people need cash. They have U.S. dollar or fiat denominated obligations, and they're selling whatever they can because the broader global economy is having issues. So, what is this telling us right here? It's a very simple kind of idea in the sense that this is, if you have extra money, you can give it to the Fed and they will give you interest on it overnight, right? So that big bubble right there in the middle during COVID is excess money. We have a whole bunch of money. We're going to stick it in here and collect some interest on it because we don't know what the hell to do with all the excess money that we have. The fact that it's completely drained down, and I think it's at like, yeah, it's 1.13 billion at the moment. It just tells you that there's no excess cash in the system. No one's accessing the reverse repo, which is essentially I give you money, you give me interest. So it's if you were thinking that like this could be, let's say that was still high, well then that could, if there's an opportunity to buy equities, people could drain that out in order to go and buy stocks and things too. It means the purchasing ability to go and get equities isn't there, right? The purchasing ability to go and do other things isn't there. There is a liquidity issue going on here. There's a money issue going on here.
Now, in the same vein, we've got this. This is the Fed.
Yeah.
Federal Reserve overnight repo facility issues almost, $29.5 billion. Look at this candle. And this goes back to 2021. So what in the hell is this?
So that is the other side of the coin. I need money, but I have collateral. So the Fed's overnight window, this is like, hey, I need cash right now. You can think of it like the loan sharks are coming. I got to get that hit, man. I need that fiat. Here, borrow my treasuries. Give me cash. I need cash to settle my obligations right now. So what that's telling you is the kind of flip side. One was them draining the accounts that they had. This one is like them basically saying, hey, hold on to this. I'll give you the keys to my car. I need $1,000 from you right now. So that is collateral backed loans. And there's such a stigma attached with using the Fed's like overnight window that they generally only do it when they're in really bad situations. And I believe we found this one. The best I could come up with was this is from November. And it's funny because if you look at this coincides with the Bitcoin price. What's it called? Starting to come down a little bit as well too. Like all this at the end of October, this was the end of October, I think it was, or the very beginning of November. And then the draining as well too. This all coincides with that recent local top in Bitcoin. And I think all we're seeing in the price coming down is big players are desperate for cash because they can't meet their obligations.
Yeah. Now, the damage here isn't just stateside. And there's one thing in particular that is pretty wild, and it has to do with Japan. So this is from Preston Pish, the Japanese bond yield curve. What in the hell is going on with this chart? Because this goes back to like the financial crisis, great financial crisis in 08. And bond yields, basically like the government issues bonds and people can purchase them, and then they get paid back with interest over time. And so you can see the interest that was being paid down through, kind of bottomed out around 2016 to 2020. And then we just see this crazy straight up, like they're needing to pay more and more interest. So what is the implication here? Why is this important?
This all feeds into basically everything we're touching on is like, okay, I need money. I need dollars. Where can I get them from? Right. With the real estate stuff, I can borrow against my properties, right? There's the home equities or even like commercial against you can take loans against. So real estate can be a collateral to get dollars. That's dropping in value. So that's not great, even in terms of selling it. You had like, oh, maybe I had some savings at the reverse repo window. No, we don't have that. We drained our savings. That's not great. Okay, I've got collateral. I'll borrow against that, right? Okay, that's going up. That's not a great sign. We have here with Japan is basically Japan's interest rates end up being very low. And so people borrow in Japanese yen, they convert it to US dollars, and then they can buy like US stocks and things too. Again, we're trying to look at like where money is coming into the, essentially into the stock market, because it really has become the economy at this point, which is so bloody backwards. But with Japanese yen, it's JGB yields rising, it's basically another faucet of money coming in, of fiat money coming in, that's getting cut off. It's more expensive to borrow, which means there's going to be less from this kind of yen carry trade coming into the markets as well. So we're basically looking at like all the sources of dollars that would prop up that price of Nvidia going away.
Wow. Now, okay, I want to there's so much here. Like
so much fun here.
Before the show, I was like, oh my God, it is really bad. Okay, so this I wanted to highlight before we kind of get into the reaction to this. But okay, so breaking: U.S. college graduates unemployment hits 9.3%. This was higher than the financial crisis era. And the interesting thing to tag on to this metric is, number one, the Bureau of Labor
Statistics.
Bureau of Labor and Statistics says it won't publish the October jobs report. If you remember from last week's and the week before show, they waffled on that. They said, we're not going to put out the numbers because of the shutdown. And then they were like, yeah, okay, we're gonna put out the jobs report, but we're not going to include actual unemployment numbers. And now they're like, actually, we're just not doing it at all again. And then furthermore, the U.S. November jobs report is rescheduled for December 16th.
Right when everyone's on holidays too. Interesting.
Yeah. Like they do not want the numbers to be talked about because they must be so bad. And speaking to numbers being bad, here's the U.S. debt clock. This is usdebtclock.org. U.S. national debt over $38.2 trillion now. But Nathan, you pointed out a special metric here. There's so much to look at, but this one here,
yep.
Total debt to GDP ratio. There's a magic number, if I'm not mistaken, but 130% debt to GDP. First, let's explain what debt to GDP is, and second, let's explain why being this high is historically very bad.
Yeah, it's essentially like what the country owes versus what they're necessarily bringing in, right? What's your income to kind of debt ratio is a simple way of looking at it. And historically, and I forget the exact number because I forget how many countries they looked at that hit this, but it was something like 95 or 97, which again, is just because the sample size was only like 30, something along those lines. And so countries that hit a debt to GDP of 130% or higher defaulted like 95, 97% of the time, with the one exception being Japan. That was it, right? And so the fact that the U.S. has gone beyond this,
how well Japan is doing right now.
Yeah, their birth rate's declining, right?
Yeah,
their yen is collapsing, right? It's not doing great. They're probably going to have to intervene on that pretty soon here. Yeah. Japan is not in an enviable position. And if you remember, man, they used to be, right? We're coming into Christmas times. Everyone's favorite Christmas movie, Die Hard, Yakamoto Plaza, I think is what it was.
Yeah.
Everyone thought that like Japan was going to take over the world. Like U.S. business, you better start learning Japanese. Watch out for that Nintendo, which I do still love Nintendo. They still have a special place in my heart. If you knew my children's names, you would know that for sure. It's not great. It's a stagnant economy that's not really growing or hyperproductive. Their debt is out the roof, right? Their birth rates are collapsing. It's not an enviable position. And it's essentially only because everybody borrows in their super yield curve controlled cheap fiat currency that they're still able to continue at this point in time. But it's another little signpost, right? There's something else to notice, that there's no going back. If you're here, you know how this story ends. And if you've seen that Weimar chart, you know it's going to be crazy along the way. If you're one of the people that's contributing to, what was it, like 11 on the Fear and Greed Index, whatever we saw right there, look, don't even like zoom out on the chart. Just look where we're going. Give me one plausible situation of how we can recover from this. Because that's essentially it. If you think that the governments can pay off their debt and start keeping everything in budget and that they will keep the currency or maybe even strengthen the currency, that's the case where Bitcoin fails because it's not needed, right? We talked about, we had FTX and we had COVID, but the other collapse that happened just before it was 2008, which Bitcoin was at zero because it didn't exist yet, right? So think about the growth since then. That wasn't that long ago. That's what we're trying to stop. If you give me your theory of how we right this ship and that Bitcoin is not needed, okay, then be worried about the price. But if you can't do that, if you think they're going to continue to print money, if you think they can't pay back the debt, if you think that they're basically insolvent and just a walking zombie at this point in time, then this is your buying opportunity, as it always is.
Yeah. And if there's any indication that they want to keep us distracted, I've got a couple little tidbits to close out this section here. Here's Treasury Secretary Scott Bessent. Says, thanks to the one big beautiful bill, every American child born over the next 3 years will receive a government investment account that grows in the stock market. When these young Americans turn 18, they will be able to access this account, learning the power of compounding returns and building real financial literacy along the way. Spoiler alert, but this was not for them. This was not done for them. This was done to prop up the bubble. This was done because everything is broken, and the only thing that they can do is effectively force what fiat has done to everybody, but force at an early age these people to become like quote unquote professional investors, which is another way of just saying like gambling with your savings, because there's no effective way to do it, except now there is.
It's worse than that. It's so, because they make it, again, it's like an abusive relationship, right? It's always your fault. It's your issues. So they're here to help you. I just care about you, right? I'm going to give you money that you have to buy stock, but you can't sell it. Do you remember when they turned off that sell button on like GME?
Yeah.
They're doing that to the US stock market. Hey guys, here's some cash. You can go and buy stocks with it. Oh, cool. Can I sell it because I got some debt to pay or I got some bills to make? No. I want to buy some food. Don't think so. All you can do is buy stock with it and then hang on to it. So it tells you just how like nefarious this is. Where again, people are going to feel good about it, right? But all they're doing is propping up the large companies. That's it. They're just propping up the house of cards that's falling apart. Because if it's funny, you don't pay no attention to what people say. Watch what they do. Well, if you wanted young Americans to save, and I'm not saying this is necessarily the best option, but it's not a bad option. If you wanted young Americans to save, then you'd want them to save like the government saves, like Fort Knox. So why not give them gold if you give a shit, right? You're not saving in stocks. You got a fortress full of gold. But no, here, have my paper, just like a treasury company.
It's funny because it's like UBI, but only for propping up the bubble.
Bingo.
It's like, you know, people are like, I need to eat. I can't afford rent. And they're like, here's a portfolio of the hottest stocks. Like, this is what's happening. This is what we've come to. It's wild. And again, if that wasn't enough distraction for you, there's one more thing. They're going to drop a hot stack of redacted Epstein files on your lap just to shift the focus away from the economy for a little bit, because it's pretty bad. But like, if you think that you're actually going to get any real information in this, what did you say? It's going to be like a pile of paper with Sharpie.
That's exactly it. It's be a sheet of paper completely scratched out with Sharpie. There's going to be nothing of actual value or information there, because it's unfortunate too. Like, I understand that this is kind of a like heads I win, tails you lose situation, because it's not possible for them with all the like back and forth and flipping, and like they've completely lost any credibility on it. So even if it was the correct document and they released everything, which I don't think they're going to do, I don't believe you. You have no credibility at this point. Remember the fake binders they were all holding up? Like, we've got the files right here. What the fuck happened to those?
Yeah.
But again, this is, and you're going to see more of this. If our like theory here, again, it's all probabilities, right? Can't tell exactly where things are going. If things are going to get worse, expect more distractions. Like, why are they releasing this now? Why the flip? Why we're going to hide the jobs report, but here's the Epstein files. That's 100% a magician saying, look over here.
How much alien news do you think we're going to get in 2020?
Oh my God. It's going to happen. Yep.
Yeah. 100%.
Yeah, we're going to get some spicy saucers coming down.
Yeah.
There's going to be, we'll see, maybe the worst one is, Ben, expect a war, expect conflict.
Yeah.
They do that every fucking time.
Yeah. Yeah. Nothing distracts like hating somebody else.
Yep.
Yeah. Anyways, it's not all bad news today. Bitcoin still works. And on the other side of the jump, we're going to be chatting about some really awesome new stuff out of the dudes over at Bull Bitcoin. We've also got an excellent example of Bitcoin being an absolute lifeline in a natural disaster. We also do have, unfortunately, an update on the Samurai wallet developers and much more. So stick around. We'll be back in just a minute. Make sure you drop a like on the video. Also, if you're not subscribed, if you're new here, you're enjoying it, make sure you do subscribe, hit the notification bell so you can check us out every week. Be back in a sec. Looking for a simple and secure way to manage your Bitcoin on mobile? AQUA Wallet has you covered. It's user-friendly and puts you in full control of your Bitcoin with secure self-custody. AQUA also supports Lightning and Liquid Network, making fast, cheap Bitcoin payments and asset transfers easier than ever. Plus, it even supports stablecoins, giving you ultimate flexibility. Built on open source code, AQUA is transparent, trustworthy, and perfect for beginner and pros alike. Ready to upgrade your Bitcoin experience? Click the link in the show notes or scan the QR code on the screen now to download AQUA Wallet today. Securing your Bitcoin doesn't have to be complicated or invasive. With NUNCHUK's HONEYBADGER plan, you get state-of-the-art multisig with built-in inheritance planning and no KYC required. NUNCHUK is trusted by users to secure billions of dollars in Bitcoin. The HONEYBADGER plan offers 204 assisted multisig, guiding you step-by-step on mobile or desktop. It works seamlessly with hardware wallets like TapSigner, ColdCard, Jade, and plenty of others, so you're always in control. Plus, with non-KYC inheritance planning, you can ensure your Bitcoin goes to your loved ones. No private info needed. Take control of your Bitcoin today. Click the link in the show notes or scan the QR code on the screen to check out the HONEYBADGER plan. All right, we're back in, and we had to talk about this Bull Bitcoin. Obviously, I did the video on their wallet, which is just chef's kiss. It's beautiful. You got to check it out. It is a wonderful option for mobile, and it pairs with things like the cold card. It's awesome. So Recoverable, this is effectively well, I'll just read it from the tweet here, a privacy first encrypted hot wallet backup and recovery protocol implemented in the Bull wallet. It serves as an alternative to custodial wallets for beginners, a key milestone in our journey to make self-custody the safest default Bitcoin user experience. So Nathan, you did a deep dive. You watched through this video. This is like a 30-minute video explaining like how unique and awesome this feature is. What is Recoverable?
It's a wonderful alternative to, like, essentially it's for if you want to onboard somebody quickly and you want to make sure that they have the recovery backed up, but we don't necessarily have the time to get into like seed phrases, what they are, how to protect them, get them on metal, all that fun stuff as well too. Now, make no mistake, your seed phrase is still there. You can grab that as well too. But what this is doing is creating a encrypted backup, and then it's keeping the decryption key on a key server, which is open source and you can run. And there's a few other elements there. So I'll try and explain it as simply as I can quite quickly too. So you take your key, and then your wallet has these BIP85 derived keys. So we take our private key and we're actually going to encrypt it using one of the sub keys from that wallet. So it's got the same kind of level of protection as the Bitcoin key itself. So I got an encrypted backup now as well too. So I got the encrypted backup, and that we're just going to stick with some other information on like a Google Drive. Again, it's encrypted by the same level of cryptography, the same security as like a private key. So that you can just stick on your phone, your Google Drive, you keep that wherever you like. Then there's going to be another piece of information, the decryption key that you need to unlock that backup, and that's going to go on the key server, but there's no like direct identifying information with it. And then what you've got is between basically like an identifier and a password that you creates the ID to go and get the key if you need to. So essentially, you've got your password, you've got that file stored somewhere too, with the identifier information and your password. You can then ask the server for the decryption key. But practically speaking, like it just looks like you say, hit backup, you get a file, where do you want to put it? Google Drive, done. Like that's it. It's really easy. In my mind, I kind of view it almost like the TapSigner backup as well too. And it's almost like you back up your TapSigner encrypted backup, you give the server key, kind of the decryption key, and then the only way to link the two is with an identifier that you have that requires a password. So there's no way of linking them. Even if you had both, it wouldn't necessarily matter. Yeah. So it's a very simplistic view of it, but it's a wonderful system from a user perspective because it's super easy. It's super easy. But like Francis says, it's not an alternative to getting a cold card, right? What it is like someone's getting started. We're spinning up quickly. It's a safe, secure, awesome backup system for a hot wallet, especially when we don't have time to explain key management, seed words, all that fun stuff.
Yeah. It's and again, just thinking adversarially, effectively, somebody would have to compromise your cloud storage.
Yep.
They'd have to compromise the other like key like cloud server that they have. They would have to find both of those files, and then they would have to relate them, which there's no way for them to figure out.
And they would need the password too. You wouldn't be able to, I think, get it without the password, right? Yeah. And the server itself is rate limited. So even if you use like a 6-digit password, you can only get like 3 attempts in 24 hours. It would take 1 million to brute force guess it, right? Yeah. So you must have the password, the backup, and the key server in order. So you need all three pieces. Like technically, it's Francis comments on this. It's like a 2 of 2 recovery system, but essentially it's more like almost like 3 of 3 because you need the password as well.
Yeah, yeah. And so, but again, from the user perspective, it's backup to Google Drive, and I have a pin. Like that's it, and it's just an easy one. Hit the button, recover. It checks your Google Drive for the file, and as long as you have a pin, then it just finds the appropriate decryption key. It does it all in the background, so it's very, very automated. So I love what they built here. I think it's super awesome and really good work for them. And on the same front, they just announced support for Crux, which is like a DIY kind of build it yourself type hardware. It supports actually a whole bunch of different kinds of hardware. I actually just picked up this one myself the other day.
Nice.
But yeah, I've done a video on Crux before. Same idea. You can do like the QR scanning. You can do SD card. You can do all kinds of different stuff. But it's pretty solid. It's a solid device. So like they're working hard. They're getting support for a ton of different hardware, and yeah, it works really, really well. So
that means that they've announced Cold Card, Seed Signer, and Crux now as well too. There may have been something else I'm forgetting, but I know I've seen at least those 3.
Yeah, I was in developer mode and I saw all the stuff that they're like
tinkering with.
Ready. I was like, oh, there's a whole bunch more. So yeah, there's a ton. Now I wanted to outline this. Shout out to Dread for sending this over, who's down in Jamaica. Also shout out to Frank Corva, who wrote the piece. But piece is entitled "Jamaica's First Native Bitcoin App is Helping with Hurricane Relief." Last month, Hurricane Melissa ravaged Jamaica, and from the first day the storm hit the shores of the country, Flash, a Bitcoin app, has been used to fundraise, distribute funds, and purchase life-saving items for the storm's victims. The app, created by Jamaican native, we'll just call him Dread because that's how I know him, is known as Dread in Bitcoin circles, initially designed it to mitigate the difficulties of making digital payments in Jamaica. However, it has also proven to be a vital tool in this time of emergency. Quote, "Since we've been hit by Hurricane Melissa, the need is greater than ever to have open and resilient payment rails and money that we can use during disasters like this, because this will not be the last one. The Caribbean has had hurricanes like this make landfall every year for the past 3 years. Again, within hours, the storm affected Jamaica. Dread has set up a fundraising campaign, which is still running via BTC Pay server plugin running on the back end of Flash." Super, super cool. Side note, he also shot me a message early on because just timing worked out, but I did a video on BitChat, which is Jack Dorsey's vibe-coded app that doesn't rely on internet. It's all using Bluetooth and mesh networks to be able to communicate locally on the ground when internet goes out. And I guess all the Bitcoiners were queuing into that and learning how to use it. And I guess they were sharing around the tutorial for that. So I love this story. I think it's so cool that the freedom technology is also emergency technology too. So I don't know, Nathan, any thoughts here?
No, it's just another reminder of why learning these tools, learning to use Bitcoin privacy tools, learning to use private communication tools are so important. It's basically your emergency preparedness, whether that emergency is like a government collapse, the market collapse, or a hurricane hitting you. Like, don't sleep on it. If you haven't started leveling up your skills, I mean, everyone comes in for number go up. I totally get it, but you can make yourself a stronger, more resilient, sovereign individual. And all you got to do is go through some tutorials, maybe read some articles, try some things out on the weekend, head to btcsessions.ca/learn, scan the QR code on the screen, and level up today. Because it means that, like, if this shit happens in your community, you can be like Dread, right? You can be the one there to be like, hey guys, I already know where the tutorial is for this. Check it out. You can help your community rally around you, whatever might come about.
Yeah, 100%. Yeah. Again, it's fun to talk about the current news of the day, all of this stuff. But if you're not actually taking your sovereignty into your own hands, you know, you're kind of missing the main point of everything here. So yeah, check out that page, btcsessions.ca/learn. Just scan the QR code. It'll take you right there. A bunch of tutorials teed up. If you can get through those, you already leaps and bounds over your average Bitcoiner. So yeah.
It's like watching firearm YouTube videos and never buying one yourself. You kind of need it at some point.
Exactly. Now, in less than ideal news, the second Samurai wallet developer William Hill was sentenced to 4 years in prison and 3 years of supervised release. This on top of Keon Rodriguez getting 5 years in prison. This is just a massive miscarriage of justice. It's so unfortunate. They literally created an open source piece of software that anybody can use, and because bad people can also use it, that was basically the crime. They had knowledge that bad people could use this, as anybody who creates technology knows that bad people doing illicit things can use any technology to help them along the way. And then they end up in prison for it as open source developers. I will say there is a change.org petition to see if we could get a pardon for Keon. That's been making the rounds, and yeah, maybe we'll throw that down in the show notes. We'll get the editor to toss that in after the show. But yeah, make sure you do take a peek for that, because I think it's important. I don't know if we can make progress on it, but like, this is just so unfortunate. So Nate, do you have thoughts here?
Yeah, fuck the state.
Nice. Yeah, well put. Very concise. Speaking of the state, Canada sucks, and let's dive into that. There's a couple tidbits this week. This one was tagged to me by Mags. So Mags, thanks for bringing my attention to this. But let's take a listen to it. So caveat here, it goes on to talk about how this is for individual streamers in Canada. It's currently not. It's more broad than that. But we all know where this is headed. We know how this is going to apply. So nonetheless, new Canadian government regulations just dropped on streaming platforms, and they're insane. Platforms must identify CanCon Canadian content using a 60-point system they can't verify. Yes, the government wants platforms and creators to verify that they fit their definition of being Canadian. The CRTC forces public revenue and spending disclosures for all streaming platforms, annual production and diversity reports required, even for the user uploaded content on these platforms. Platforms may need affidavits and legal proof for videos they didn't make. Strict Canadian copyright ownership rules disqualify many videos and shows. Framework lays groundwork for future algorithm quotas and streaming levies. Music videos are treated like full TV productions with complex scoring. In summary, this government is picking and choosing what it deems to be Canadian in 2025 in some Orwellian manner. It's inherently racist, totalitarian, and destroys a creator economy while favoring Canadian corporate dinosaurs. For instance, if you're a Korean Canadian YouTuber who talks about K-pop, there needs to be a justification or proof that you're Canadian, and other details or platforms will hide your content from the algorithms. This will be placed on the platform's shoulders. If you're a musician, again, prove you're Canadian, your music is Canadian, or risk having the content kind of hidden or pushed aside in favor of stuff that did prove it was Canadian enough. These regulations create senseless bureaucracy that will stifle creativity, expression, and will destroy the livelihood of countless creators and artists. It will turn Canada into some hermit kingdom of government-tilted media. Canada can and should be a cultural export superpower like South Korea. This move is more like North Korea, creepy, weird, and will make Canadians poorer and less free. Again, on the footnote on page 5, it's not for individuals, but it'll fall to the platforms, which means the platforms will just, again, you're still, as a content creator uploading, you're still at the end of that stick. Like, you're still the one that's falling under this. It'll just be the platform that makes the decision. So really unfortunate. Luckily for us, Nathan, I thank you for contributing this fantastic idea of having a weekly segment on why Canada sucks. So I think that we're above board, man. We are Canadian through and through, complaining about how shitty the government is. I think we got it here.
I think we have a few concerns there, but I just got to point out, like, this feels like a Clockwork Orange, like they're just making like open your eyes and watch stuff right now too. The Canadian media and art is so wonderful that we have to, by decree and threat of violence and kicking you off, make people watch it and put it out there, because that's how you know it's the best. I haven't watched the CBC in years, but it was shit then, and I'm sure it's shit now too. Like they're basically like what do you say, like power hungry children who are making you watch their stupid play. But they've got guns. Like they're literally just sitting there like, mom and dad will laugh. You will laugh and you will enjoy this. And unfortunately, too, like we have a bit of an issue because I'm not Canadian. I'm an Alberta Bitcoiner. So I guess maybe I'll count as a diversity hire.
That's true. That's true. The Republic of Alberta can't come soon enough, my friend.
Mm-hmm.
Now, speaking of claims to land.
Nice segue.
Yeah. So can you remind people about what went down in Richmond, BC just recently?
We had, I think it's pronounced Cowichan, but we have a native tribe make claim on existing, like, what is it, fee simple titles, saying that, like, hey, back in the day, we were there. Therefore, it should be ours. It was kind of the argument that they were going for, right? And they won. They won in court. And originally, I believe it just mostly affected commercial buildings, but those claims have extended well beyond that because there's basically a whole bunch of, like, I think it's disputed, like just basically unresolved. There isn't a treaty on a whole bunch of BC lands as well, too. But now it's really affecting Richmond, BC. And I've seen from like listening to the real estate guys that like mortgage companies will not give loans on this, right? They are, if you already have a mortgage, they're kind of like just renewing it. Again, there's kind of that public perception thing as well, too. But there's now major risk for all the loan providers. Like, whose title is this? I can't give you a loan if you're not the one that actually owns the property. It's not how a mortgage works. So it's really, really screwing with the real estate market in Canada and just completely undermining property rights, which I saw somebody point out. So I want to reaffirm here as well, too. For anyone that's affected by that situation, I think you got a damn good claim that you shouldn't be paying any property taxes either if it's not really yours.
Yeah.
So make sure you try and take the flip side of that coin. But Ben, it's gone so much worse. So the whole native disputes, oh, yes, it gets better. What do you have here, my friend?
Oh my God. Okay. So I'm sure you have thoughts on this. A group of Alaska. So not even in Canada, Alaska tribal nations. They're going to the BC Supreme Court to demand a seat at the table in Canadian resource development, including a mine expansion that is among the nation building projects Ottawa has selected as pivotal to economic development. The Alaska groups argue that their historical use of what is now northwestern BC in Canada makes them Aboriginal peoples of Canada under the Constitution Act, saying that status should guarantee them the same rights to consultation as Canadian Indigenous groups. Man, they opened up a fucking can of worms in Richmond there.
I hope everybody's having fun. I hope you felt really good about those stupid ass land acknowledgements this whole time too. If you keep telling people the house is theirs, they might take the keys at some point in time. Funny how, by the way, all like the NHL teams, they don't do the land acknowledgement at the beginning anymore. I guess they want to hang on to their stadium. It's gotten just absolutely ridiculous. But there is a silver lining, Ben. I've just realized something. I've had this moment here. I am just a mutt of like Anglo-Saxon white blood going back here. So I think it's time for me to return to maybe Ireland, Germany, UK, Russia. I am native Ireland. All right. My people walked there long ago. I'd like a nice place in Dublin, please. That was mine once.
You know, my grandfather's from London. I think I could get myself a nice flat somewhere downtown London.
Take the palace.
Excuse me, good sir. I see you enjoying your afternoon tea there, but this is my native land, and you're going to have to return it to me. This is
Absolutely
wild.
It's insane.
It's so silly. Like I have no right to go to London and boot some dude out of his house who's been living there his entire life. Like it's
depends. Is he XRP army? Because then you do.
That's fair. Bitcoin Day's precedent. Yeah. This is just wild, and we'll see how it unfolds. Don't worry. Stay tuned for the next Canada Sucks section. Now, Canadian government approved. We are sufficiently Canadian. We're going to touch on a couple quick other things. Did you see Bitcoin just hit its 5% era? That means that we're down to the final million coins. So Bitcoin has now mined 95% of its total supply, only 1 million coins left to issue. Yeah, and I mean, this is what we're seeing also with miners. Again, the epochs, the number of coins per block as a reward are they're getting slimmer, and if that price isn't high enough, then what do we get? We get miners turning off or miners pivoting to things like AI. You know, it's going to be interesting, but either way, 1 million left to issue.
Funny on that note too, if I'm not mistaken, whatever epoch you're in, if you take the block subsidy at the end of the epoch is the percentage that remains. So before at the very end of this cycle, before the next halving, there will be 3.125 Bitcoin percent left remaining to mine.
Damn.
Right?
That's cool. Math
is fun.
Yeah. Now, I am headed to the African Bitcoin Conference. So I'm on a plane very shortly here. But that doesn't mean that things stop happening. We've got some interesting stuff coming up here. So on Monday, I'm releasing a tutorial on the Brains deck. It's pretty badass, actually. I got it all set up. You can do all these different metrics. An ode to when the price was higher.
Look at that red.
Yeah. Yeah. So, but you can have your own personal graphics here. You can, this is actually my hash rate for the hobby miners that are going to my daughter's Lightning wallet. And then we've got Bitcoin difficulty, hash price, block height. You can do a whole bunch of different things, and you can have the screen cycle across different scenes. And these are just kind of the initial metrics it's rolling out with, but it has a ton more. So I go through the setup, unboxing, how to use it, all of that stuff. Really, really cool. Really, I love this thing. I'm actually very impressed with how it works. It's great. So stay tuned for that. You get a first look at that. Nathan, you've got a great guest next week.
Yes, I've got Dr. Jack Cruz next week, which is a spicy, fun one. So not for the faint of heart, but if you'd like to hear some unbelievable stuff that you're going to go and then research after the fact. And it again, for anyone who hasn't like dove into that sort of world a little bit, it's going to sound crazy. Just make a note of it and then start Googling things afterwards. It is unreal. So I had a fantastic conversation. This guy is he's on like a fantastic orange pill journey too. He is just interjecting Bitcoin in a ton of different conversations. Brilliant neurosurgeon. Very, very fun conversation.
Yeah.
And spicy.
Yeah. Also a great friend of the show. Shout out Jack. Thanks for always doing the tags if somebody has Bitcoin questions and shouting us out. Super kind of you. Not something you need to do, but we appreciate it nonetheless. Now I am chatting with somebody next week who just launched a book, Miss Natalie Brunel. She just wrote Bitcoin is for Everyone. So we're going to be chatting. She just had her book launch in New York at PubKey, where I had my birthday earlier this year. And actually Gary popped down to go see it as well. So it was a good time all around. So congrats to Nat. And yeah, stay tuned for that. And also yourself and Gary will be heading up the news next week.
That's right. We'll be taking over the news show while you're away in Africa.
You're gonna have to explain to Gary why Canada sucks.
That's exactly. It's gonna be a little bit more in depth, or I'll get him to do it in kind of like an awkward, like, no, wait, did this really happen? Can let me read that again?
And then also coming up, we've got the second ever episode of Bitcoin Boomers. They only pump out one episode a month, so you got to stay tuned for this one. This one drops on Sunday, November 23rd. Gonna be a blast. Now, you previously talked to this guest, Bob Murphy. Who is Bob Murphy?
So Dr. Bob Murphy is basically one of the most brilliant Austrian economists alive that we have today. Like, and that's a short list. I mean, there's a lot of people in the space, but there's only a few schools that actually teach it, and a lot of people have kind of gone to the level that he has. But he's at I think he's at the Heritage Institute and the Mises Institute. I have the book behind me on the shelf. It's Money Mechanics by Dr. Bob Murphy. In terms of understand, all the things we were going through earlier, trying to figure out where the money's coming from and how it's going to affect stocks and Bitcoin and all this stuff too. He is brilliant at understanding the current money creations and the problems with it as well too. And he's a big Bitcoiner as well. So brilliant guy. It's like the closest we can get to talking to Rothbard and Mises in today's day and age. So it is a wonderful conversation, particularly for anyone, if you got friends or older relatives that don't understand the problem yet, that would be interested in understanding money and understanding Austrian economics. This is the one to send to them.
That's awesome. It'll be a good rip. I'm certain of it. And of course, having Larry, Gary, and Bob in the room is always makes for a good time. So, nonetheless, it's going to be a huge week. So stick around, subscribe if you have not already, and drop a like on the video if you enjoyed the show. And as we said earlier, it's very important that you take control of your own Bitcoin, learn how to self-custody, learn the tools, because that is how Bitcoin can really make a difference for you. So we always play a clip at the end of the show that encourages you to go to our Learn page and start picking away, start learning. So with that, we're out of here. Have a wonderful evening wherever you guys are. Keep stacking those sats, but also keep stacking those skills. I'm Ben. This is Nathan. And this was your weekly session. We'll see you guys soon. Hey, you. Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.